All right, so imagine this, okay? You're waking up and the only sound you hear is that like gentle lapping of the Andaman Sea, right? And the view is dominated by these just massive limestone cliffs. They're just shooting straight out of this turquoise water. Just incredible. And we're talking about Railay Beach. It's in Krabi. And you, our listener, you sent us some really interesting stuff from a blog post about its potential as a place to invest in property. So beyond just the scenery, beyond like how gorgeous it is there actually a smart financial move to be made here? Should we be like looking at buying property? Is that a good idea? Well, that's what we're going to dive deep into today and find out.
Yeah, absolutely. The blog post you shared, it really paints this picture of Railay Beach. It lays out all these different ways you could invest from condos to like seriously high-end villas. It even talks about like eco-friendly options, which is pretty cool.
Right.
Yeah, what we're going to do in this deep dive is we're going to unpack all that info. We'll pull out the really important stuff, and then we'll see if investing in this part of Thailand, this like ridiculously beautiful part of Thailand, actually makes sense for you. So we'll look at why it's attractive, what kinds of opportunities are there, and then the like essential things you got to think about. Stuff like the local market, what are the rules and all that.
Okay, so the blog, they really like hammer home how visually stunning Railay is. Limestone cliffs, these perfect beaches, the water is crystal clear. It almost sounds too good to be true, but they make a really good point, which is that this beauty, it's not just for like Instagram, it's a huge draw for tourists. And that means money, potential rental income for people who own property there.
Right.
So think about it. Rayleigh's like iconic cliffs and those amazing beaches, they're basically blue chip assets. They're the reason why there's such a strong tourism industry there, which directly leads to a need for places to stay. So that's like the core idea behind investing there.
Yeah, you hit the nail on the head. That natural beauty, it's not just a pretty background. It's like the main product that's driving this whole thriving tourism industry. Krabi, as a region, it's already well known, and Railay Beach is like the crown jewel. And because you have this steady flow of visitors all year round, that creates a really strong and consistent demand for accommodations. So when you think about investing, especially if you're looking at places close to the beach, you're tapping into this robust and I'd say growing market.
Okay, and this is where it gets super interesting to me. The Post mentions something about favorable government policies that seem to encourage foreign investment in Thailand's property market. Now, whenever we talk about investing overseas, there are always regulations, right? So what are they doing specifically to make it easier for people like us to invest there?
Yeah, so what's interesting is it's the overall approach they're taking. While there are definitely regulations, and we'll dive into those specifics later, the Thai government has been pretty proactive about attracting foreign money, and that includes real estate. This can take different forms. Sometimes it's about streamlining how you invest. Other times it's about specific incentives they offer. The blog post is right when it says that compared to some other popular areas in Thailand, Krabi can be more affordable to get into, in terms of property.
Right.
So this lower barrier to entry, combined with the government kind of like encouraging investment, it creates a pretty unique opportunity. But as the blog wisely points out, you absolutely got to do your research and maybe even get some professional guidance to navigate all the nitty-gritty details.
Okay, so we've got this amazing location, a constant flow of tourists, and a government that seems to be on board with foreign investment. So let's talk about the actual opportunities. The blog breaks it down into different property types. They start with condos and apartments. So why would those be a good investment in Rayleigh?
Well, condos and apartments are usually a more, I'd say, attainable way to start investing in Railway. As the blog says, they don't require as much money up front compared to, say, a villa. So they fit a wider range of budgets, which is good. And importantly, they can give you a really solid return on your investment, especially if you're renting them out. Tourists often like them because they've got things like swimming pools, maybe a gym, and security, which makes them feel safe.
Right.
And what's also great is that these properties are usually managed by professionals, so you don't have to do as much work. It's more hands-off for you as an investor. So if you want to get into the market but you don't want the hassle of like managing an entire villa on your own, condos and apartments can be a good first step. But the key, as the blog highlights, is to really research the best options that fit your budget.
Okay, so then on the higher end, we have luxury villas and resorts. These are obviously way more expensive, but what's the potential return like? Can you make a lot of money with these?
Yeah, I mean, if we think about what makes Railay so appealing, it's that demand for really high-end exclusive experiences. That's what luxury villas and resorts are all about, right? They offer private pools, insane views, and top-notch service. So while the initial investment is a lot higher, so is the potential for big returns. And that's because people who are looking for luxury are willing to pay a premium for it.
Makes sense.
And as the blog emphasizes location, 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 villas that are right on the beach, those are the ones that get the highest prices and the strongest rental demand.
Got it. Now, the blog also talks about something that's pretty relevant these days, eco-friendly developments. This is a trend we're seeing everywhere. But how does it work in Railay Beach? How does that fit into the investment scene there?
That's a really good question, and it points to how travelers' priorities are changing. Eco-friendly developments, they're built with sustainable materials, they use energy-efficient technology, and they appeal to a growing group of tourists who are really environmentally conscious. So when you invest in eco-friendly properties in Railay, you're not just doing something good in the planet, you're also tapping into a specific market that's growing rapidly. These developments are all about blending in with the natural surroundings, which is a big plus in a place like Railay. So this niche market, it can bring in strong rental income, and you might even see good appreciation as sustainable tourism keeps getting more popular.
Okay, now let's zoom out a little. Railay Beach is just one area within the larger Krabi region, right? And the blog nicely breaks down a few other popular spots where people are investing. It describes Railay as super unique because you can only get there by boat, which adds to its charm and exclusivity. But how does this limited access, how does that affect the investment opportunities there?
You know, the fact that you can only reach Railay Beach by boat, it's a double-edged sword for investors. On the one hand, it definitely makes it more charming and exclusive, attracting tourists who want a more secluded experience. And this exclusivity makes it perfect for smaller, more specialized resorts and those high-end villas that really capitalize on that sense of escape. But on the other hand, limited access can also create logistical problems. Things like construction, getting supplies in and out, and even accessibility for some travelers can be tricky. So while it's a huge plus for certain types of investments, it's something you really got to think about carefully.
Okay, so in contrast, the blog describes Nang as like the main tourist hub, really bustling with activity and all kinds of visitors. It sounds like the investment focus there is more on things like apartments, guest houses, and hotels. What's the main difference between investing in Railay versus Nang?
The main difference is who you're targeting and the scale of development. Nang, because it's the main hub and easier to get to, it attracts a much wider range of tourists. You've got budget travelers, families, everyone. So the investments there are also more diverse, often focused on higher volume accommodations like apartments and bigger hotels.
Got it.
All the foot traffic in Oang is great for rental properties, but, as the blog mentions, you've also got more competition to deal with. Railay, because it's more secluded and harder to reach, tends to draw a specific type of tourist, someone looking for a higher-end experience. That's why there's more focus on smaller, more exclusive properties.
Makes sense. And then there's Klong Wong, which the blog describes as more relaxed and upscale with a focus on those high-end villa and eco-friendly developments, kind of like a certain aspect of Railay. So what makes Klong Wong stand out as an investment destination?
Klong Wong, it offers a different kind of peacefulness compared to Railay. Railay is secluded because you literally have to take a boat to get there, right? But Klong Wong's relaxed vibe, it comes from how it's been planned and the style of the resorts and villas there. It attracts people who want a peaceful, often luxurious getaway, but not necessarily the total isolation of Railay. And the focus on high-end and eco-friendly options, it fits perfectly with that market, which means good potential returns for investors who cater to that.
Yeah, and the blog actually has this really helpful table that summarizes these three areas, which makes the different investment focuses super clear. It really highlights how important it is to match your target audience, your budget, and your long-term goals with the right location within Krabi.
Absolutely. Understanding what makes each area unique is fundamental to making smart investment decisions. There's no one-size-fits-all approach here. You got to tailor your strategy to the specific dynamics of the location you choose.
Now, the blog also stresses how important it is to really understand the local real estate market. And that's not just about looking at pretty pictures, right? What are the key things investors need to pay attention to?
You got it. Smart investing is all about digging into the data and understanding the trends. The blog points out a few key areas. First, you got to stay up to date on what's happening in the market. That means keeping track of new construction. Are they building more condos or are they focusing on villas? Because that can tell you where the demand is shifting. Then, looking at tourism numbers year over year, that gives you a sense of how healthy the rental market is. And as the blog suggests, talking to locals can give you insights that you won't find in any official reports.
Right, makes sense.
The Krabi real estate market is constantly changing, so you always have to be learning.
Okay, and the blog talks about property value appreciation as a major factor in investment growth. So, what drives that in a place like Railay Beach? What makes property values go up?
So property value appreciation is basically how much your property increases in value over time, and it's a big chunk of your overall return on investment. In Railay Beach, a few things can contribute to that. The blog mentions improvements in infrastructure in the wider Krabi region, things like better transportation or utilities. Those can boost property values. And then, of course, being close to amenities is always a big plus, with beachfront properties always being the most valuable.
Of course.
But even places that are a bit further inland, they can still see good appreciation if they're near shops, restaurants, and other things that tourists and residents like.
Okay, and then there's rental demand analysis. So, if you're planning on renting out your property, which seems like the main goal in a tourist hotspot like Railay, what should you be analyzing? What should you be looking at?
Yeah, understanding rental demand is super important if you're aiming to make money from renting. It's not just about how many tourists are coming. It's about the type of tourists you want to attract. Are they budget travelers, or are they families who want more luxurious accommodations? That will determine what kind of property you should invest in and how much rent you can charge.
Okay, yeah.
Then there's seasonality. Railay Beach, like a lot of tropical destinations, has a high season, usually from November to April, and that's when occupancy rates and rental yields are the highest. But you also need to think about how to attract renters during the off-season, maybe by adjusting your prices or targeting different types of travelers.
Got it.
The blog also mentions online platforms like Airbnb and Booking.com, which have really changed how the rental market works. So you need to analyze average rental yields for different property types, occupancy rates throughout the year, and how people are using those platforms. It's all about making informed decisions. And one thing the blog reminds us of is that property investment is usually a long-term game. You got to be patient and realistic. They highlight the availability of beachfront land as a particularly good long-term investment.
Now let's talk money. How do you actually pay for all this? The blog outlines a few ways to finance an investment in Railay Beach. They start with mortgages from local banks. What are the typical terms, and what should foreign investors know if they're considering this option?
Yeah, getting a mortgage from a Thai bank is a common way for foreign investors to finance a property. The blog mentions that banks might loan you up to 70% of the property's value, and you could have anywhere from 5 to 20 years to pay it back. But, and this is important, the specific terms and conditions, especially the interest rates, can be very different depending on the bank. So like the blog says, you really got to shop around and compare different banks before you commit to one. And you'll need to meet their eligibility criteria, which might include proving that you're financially stable and maybe even showing that you have some connection to Thailand.
Okay, another option they mention is partnerships and joint ventures. When would this be a particularly good strategy? When should someone consider teaming up with someone else?
Partnerships and joint ventures can be really smart if you're facing financial limitations, especially for those bigger projects like beachfront developments or commercial properties. By joining forces with other investors, you can share the costs and take on investments that might be impossible to do alone.
Makes sense.
It also lets you share expertise at risk. But, like the blog emphasizes, you absolutely need a solid legal agreement that clearly outlines everyone's responsibilities, how much each person owns, and how the profits will be shared.
Okay, and finally, the blog talks about using your personal savings. What are the pros and cons of paying for everything yourself?
Well, using your own savings means you don't have to pay any interest and you don't have to deal with banks, which can be a hassle. If you have enough money saved up, it can make the buying process a lot smoother. You might even have more leverage when you're negotiating with sellers because you're offering a straight cash deal.
Yeah, that's true.
The blog suggests that maybe you could combine your savings with a smaller loan. That way you can keep some of your cash while still taking advantage of borrowing money. But regardless of how you finance it, the blog is right to remind us to think about all the extra costs that come with buying property, like legal fees, taxes, and ongoing maintenance. You need to have a clear picture of the total financial commitment.
Now we're getting into the really important stuff, the legal stuff, legal considerations for foreign investors. The blog clearly states that as a foreigner, you can't directly own land in Thailand, but you can own the buildings that are on that land. That seems like a really important thing to understand.
Yeah, it's a fundamental part of Thai property law when it comes to foreign investors. You can't own the land itself, but you can own what's built on it, which is how most foreign investors get involved. And the blog highlights 3 main ways foreigners can work within these rules.
Let's break those down. The first one is leasing. The blog says the maximum lease is 30 years, but you might be able to renew it. What should someone be thinking about if they're going with this option? What are the key factors?
Leasing is a common and usually pretty straightforward way for foreigners to get long-term use and control of property in Thailand. You can lease it for up to 30 years initially, And while renewing is often possible, it's not always guaranteed. You might have to renegotiate the terms. So like the blog says, having a really strong lease agreement is crucial. You need to pay attention to things like the renewal clauses, are they clear? And what are the conditions? Can you transfer the lease to someone else if you want to sell? And are there any restrictions on what you can do with the land while you're leasing it?
Okay, yeah.
Getting legal advice is really important to make sure all these things are spelled out clearly so you're protected.
The second option is setting up a Thai company. The blog explains that a company can own land, but 51% of the ownership has to be Thai. This sounds a little complicated.
Yeah, setting up a Thai company to own land is definitely an option, but it's more complex, like the blog says. Because Thai nationals have to own at least 51% of the company, you need to structure it carefully. There are ways to manage this, like using what are called nominee shareholders, but you have to be really aware of the potential risks and legal implications. Getting legal and accounting advice from experts is absolutely essential to make sure you're following Thai law and that your investment is safe. You need to think about who those nominee shareholders will be, how the company is structured, and what your ongoing responsibilities are in terms of reporting and compliance.
Got it. And the third option is buying a condo. The blog says foreigners can own condo units, but there's a limit of 49% foreign ownership within each building. How does that work?
Buying a condo is the most direct way for foreigners to own property in Thailand. The law says you can own a condo unit outright, but the total foreign ownership in the building can't be more than 49%. They control this when you buy.
Okay.
When you own a condo, you have what's called freehold title to that unit. That means you own it completely and permanently. So it's a relatively simple way for foreigners to own property in Thailand.
Okay, so given all these legal details, the blog really recommends getting advice from a lawyer who specializes in Thai property law? That seems like really good advice.
Yeah, absolutely. Trying to figure out Thai property law on your own as a foreign investor is really tough, and trying to take shortcuts can lead to some serious problems. It's definitely worth hiring a lawyer who knows this stuff inside and out. They can make sure you understand your rights, that all the paperwork is correct, and that your investment is protected. They can guide you through all the complexities of leases, setting up companies, and buying condos so you can avoid any nasty surprises.
Okay, so let's dive into the different types of properties available in Railay Beach, focusing on what makes them good investments. First up, we've got beachfront properties. The blog talks about high demand for luxury villas and resorts in these locations. What makes these such good investments, even though they cost so much?
Well, beachfront properties in Railay, they're the most exclusive and desirable. Being right on those incredible beaches with the clear water, that's what everyone wants, especially tourists who are looking for luxury. And that translates into a lot of potential for high rental income and also for the property value to go up significantly over time.
Right.
Yeah, so even though the initial investment is high, the fact that there's limited beachfront land available and that these locations will always be in demand, that's what makes them such strong investments, particularly if you're targeting the high-end tourist market.
Makes sense. Now, what about commercial real estate? This would be things like shops, restaurants, and guest houses that cater to tourists. What are the key things to consider if you're thinking about investing in this area in Railay?
Investing in commercial real estate in Railay, it can provide a steady stream of income, especially when it's tourist season. But how successful you are really depends on getting a prime location with a lot of foot traffic. Like the blog points out, you need to understand how tourism changes with the seasons and how that might affect how many people stay at your place and how much money you make.
Yeah.
You also need to do your homework on local business regulations and look at your competition. That's how you make informed decisions when you're investing in this type of property.
Got it. And finally, there are residential developments. The blog mentions that there aren't that many of these because of Raylay's unique geography. These seem to be more for people who want to live there long term. So how do you make money from these as an investor?
Right, residential developments in Railay are limited, but they can offer a more stable income from rentals compared to places that just cater to tourists for a short time. It might not be as much money, but it's more predictable.
Makes sense.
These apartments and smaller villas, they're good for people who want to live in Railay for a while, like expats or people who work in the tourism industry there. So you're providing a place for people to live consistently, which gives you a more reliable income stream. It can balance out investments that are more focused on the tourist market, which can go up and down. The blog points out that you have a lot of different options for property investment, even with the limitations of Raylay's geography. And it's important to remember that limited access and environmental regulations will affect how much development can happen there in the future.
Okay, so now we have to talk about the risks and rewards of investing in Railay Beach. Let's start with the risks. The blog mentions market volatility. How big of a risk is this in a place like Railay, where the economy depends so much on tourism?
Yeah, market volatility is a risk in any economy that relies heavily on tourism. Like the blog says, things that happen globally, economic downturns, Even just the changing seasons can affect how many tourists come, which then affects property values and rental income.
Right.
So investors in Railay need to be aware of this and factor it into their plans. For example, if international travel suddenly drops, you'll probably have fewer people renting properties, and that could cause property values to go down. That's why it's important to diversify your investments and think long-term to help manage those risks.
And then there's the risk of regulatory changes, which we talked about earlier with the legal stuff. How often do these regulations change, and how can investors stay informed?
The basic principles of Thai property law are usually pretty stable, but the specific rules and how they're interpreted can change. And these changes can affect foreign investors when it comes to things like taxes on property transfers, zoning laws, even rules about short-term rentals.
Right.
So the blog emphasizes that it's important to stay updated on any changes to these regulations. You can do that by following reliable legal channels and talking to professional advisors. You got to stay on top of things and be proactive about compliance if you want to protect your investment.
Now let's talk about the rewards. The blog really emphasizes the long-term investment potential of Railay Beach because of its natural beauty, strong tourism industry, and growing popularity. Why is the long-term outlook so positive?
Even though there are risks, Railay Beach still has a lot of potential for investors in the long run. It's got these incredible natural features, and the tourism industry keeps growing, which means there's solid demand for property. As more people discover Railay and want to go there, the demand for vacation homes and investment properties will likely keep going up. That means property values could increase significantly, and you could get good rental yields over time.
Got it.
Like the blog says, investing in property in Krabi requires patience and a focus on that long-term growth.
And the blog even includes a table that shows potential gross rental yields for different property types, which gives you an idea of how much money you could make. It says condos could yield 5 to 8%, luxury villas 7–10%, and commercial properties 6 to 9%. That's super helpful to see those numbers, even though they don't include expenses and all that. The blog also gives some really solid advice. Diversify, stay informed, and work with local experts. That seems like the recipe for success.
Yeah, that table's a good snapshot, but remember, those are gross yields. They could include things like operating costs, taxes, and other expenses, but they're still helpful for comparing different types of investments.
Definitely.
And the advice about diversifying, staying informed, and getting help from local experts is spot on. That's how you navigate the complexities of the Railay Beach property market, increase your chances of success, and minimize those potential risks.
Okay, so this leads us into the tips for successful property investment. The first tip is conducting thorough research. And the blog really stresses going beyond just the basic information. What kind of in-depth research do you need to do?
Thorough research means going way deeper than just looking at property listings online. You need to really dig into how the local market works, look at historical prices, understand supply and demand for different types of properties, study tourism statistics and who's visiting, and look into any planned developments that could affect property values.
Right.
The blog also suggests getting involved in the local community, reading industry reports, and really analyzing the data that's available. It's about getting a complete picture of what you're getting into.
Okay, the second tip is working with local experts. The blog says they're essential. Why is local expertise so important in a market like Railay Beach, which is so unique?
In a place like Railay Beach, local expertise is invaluable. Local real estate agents know those tiny specific markets within Railay really well. They have connections with property owners and other professionals, and they understand the local rules and customs. They can help you find the right properties, negotiate a good deal, and avoid problems that someone who doesn't know the area might run into.
Makes sense.
Like the blog says, they're your guide, your translator, and your advocate in a market that has its own special quirks.
And the last tip is diversifying your portfolio. The blog explains why spreading your investments is important for reducing risk, and they even give an example of how you could diversify across different types of properties. Why is this such an important principle of successful investing?
Diversification is all about managing risk. When you spread your money across different types of investments, different property types, or even different locations, you're less likely to lose everything if one investment doesn't do well. The blog's example portfolio shows how you could allocate your funds to condos, luxury villas, commercial properties, and even land for development. That creates a more balanced strategy that can withstand ups and downs.
Right.
So if one part of the market takes a hit, other parts of your portfolio might still do well, which protects you overall and increases your chances of success in the long run.
Okay, so before we wrap up this deep dive, there are a couple of really important things we wanted to mention. First, about pronunciation. If you hear or see the name of this beautiful place, remember it's pronounced Phuket, not Phuket. A lot of people get that wrong, and we want to make sure everyone's clear on that.
Definitely. And for our listeners, it's important to know that the information we've been talking about comes from a blog by Ocean Worldwide. They're a really reputable luxury real estate agency that's been in Phuket since 2004. Sandra O'Neill, she's the director there, and she's got tons of experience. She's been helping families and investors for years. Ocean Worldwide focuses specifically on luxury residential real estate in Phuket and also in Koh Samui, so they really know this region well.
So to sum up our deep dive into Railay Beach in Krabi, it definitely seems like a really attractive place to invest in property. I mean, it's gorgeous, the tourism industry is thriving, and the government seems to be encouraging investment.
Yeah.
But as we've discussed, it's super important to do your research, understand the legal stuff about foreign ownership, and be realistic about the risks.
Exactly. When you understand how the local market works, explore the different types of properties you could invest in, and know the legal and financial ins and outs, you can make much better decisions about whether investing in Railay Beach is right for you.
And on that note, here's something to think about. Railay Beach is special, right? It's hard to get to, and that limits how much it can be developed. So what kind of impact do you think that limited development will have on property values and how attractive it is for investors in the future? That's definitely something worth considering.